Keith, let's start with you and talk a little bit about the rotation we saw today. I mean, energy soaring, technology, financials also leading the way. Almost a direct bounce back from yesterday in terms of sector performance.
Yeah, sure. And you're going to have money pour into those kind of riskier sectors and industries, and as they're chasing this market a little bit. I mean, again, it's one of those things when you look at this market, we don't have the broader market oversold or overbought. There are certain pockets in there that are, like Nasdaq has been overbought for some time, but it continues to run higher. And I think you're getting into a situation here, Wolf, where you're going to have money that needs to be put to work. It's got to be put to work. It's going to come into U.S. equities. Again, it's the best game, maybe the only game in town right now, especially as we look across the broader globe.
What did we get out of the Fed today in the minutes? Anything new, Neil?
No, they're on an extended hold, and that's likely to be the case until inflation turns up in a meaningful way.
Could they loosen with China, with Japan, with Germany's growth disappointing?
I think the odds are that they do nothing. If they're going to move this year, it's going to be a cut. My own expectation is that we're not likely to see anything for at least the next 12 months.
I was just wondering, because the market is now pricing in a cut, right, for the summer. So is the market ahead of the Fed here?
Yeah, I mean,
often that's the case, but is the market going to be proven right or wrong?
I think that, let's give the data, let's let the market get a chance to catch up to the data. I mean, obviously, we've seen, interest rates come down quite a bit because of, sort of weakness and fears around what's going on globally. But, you look stateside, things are looking up. And, that's not just this mindless nonsense about the Fed inflating its balance sheet and all this other, ridiculous sort of chatter you hear from the bears. Look, the housing market is up. Building permits are up 20% year over year. That's a leading indicator for economic activity. End of discussion. So I think the real growth outlook in the U.S. is actually looking favorable. And, what we're telling our clients is, as these fears sort of subside, position for a bear steepening of the yield curve. The Fed's not going, but the long end is going to do most of the legwork, at least in my view.